prepares for phase 2 of the legendary bump and bust pattern. Grannies and grandpas worldwide are quivering at the thought that Bitcoin is about to blow the banks into oblivion big time. And is Plan B's failed stock-to-flow model actually a failure? Or did something just show us that it is potentially a bigger bust than we could have ever imagined? Right now, the price of Bitcoin sits firmly within the same range that we've been for the last few weeks. But as more and more data comes out and more news comes out, this gets bigger and bigger for the price of Bitcoin. As we all know, Bitcoin before its biggest busts forms very large macro busts that lead to usually at least a year, usually a year and a half to even 2 years of maximum bustage. We saw it back in 2018 and 19 forming one of the most massive symmetrical triangles we've ever seen. We already know we're currently sitting within a year and a half long gigantic falling wedge right here, right? So these macro patterns are very familiar to people that follow Bitcoin on these long-term scales. They're always usually triangular, but there's another interpretation, which is that we've seen massive descending broadening wedges year after year after year. In fact, this is potentially the fifth macro descending broadening wedgie, according to El Crypto Prof on Twitter. The first being in 2011, and then in 2013, 2015, 2019, and now we're seeing a breakout of one of them now. And interesting to note, as he also states here, that each one of these gigantic descending broadening wedges had perfect backtests. And we did have a backtest. Whether or not you want to consider it a descending broadening wedgie or not, or you want to look at it a different way, the trend line is very clear of Bitcoin having this very long-term trend line. And when it started breaking out of it, it started kind of erupting there. But also, we know exactly where the backtest was, exactly also on that trend line. So this theory, I think, is very interesting and also very useful. But, will this time be any different? I personally don't think so. I personally think that Bitcoin does have much more room to pump over the next couple of months. We also see a U.S. senator here talking about the Biden administration's hostility towards Bitcoin and crypto companies that's preventing American champions from emerging in the U.S. And that's literally the only thing that's happening, guys, every single day. For pizza's sake, if we look here, U.S. Treasury Secretary saying decentralized crypto markets threaten national security. They are so afraid. They are so afraid of people leaving the banks, which is already happening, and people going towards Bitcoin, which is already happening over the last month. They are so afraid of this because they know that Bitcoin's the better option, but they don't want you to have the better option. With that being said, they're so afraid they are trying. That's why they're throwing lawsuits left and right. CFTC, SEC. With this U.S. senator coming out and saying this is not a good thing, obviously, and it's preventing Americans from having a very good position, or the U.S. having good positions within the cryptocurrency market, is just absolutely very true, and it's unfortunate for the United States, which will get left behind. Okay, let's imagine this scenario: the U.S. bans Bitcoin. Let's just say, like, the worst possible way the U.S. could, a blanket ban on crypto, a blanket ban on Bitcoin. Nobody can use it. Nobody can buy it in the U.S., stuff like that, right? Would that affect price when that news comes out? Absolutely it would. But a year after that, would it still be affecting price? Absolutely not. Bitcoin is global. Bitcoin is not a U.S. currency. It is a global currency. So if the U.S. absolutely has the ability to stifle and harm the price of Bitcoin in the short term, but long term it's not going to matter. And in that scenario where something pretty much the worst possible scenario for US citizens in terms of crypto, if that would come true, what would the US do, right? The dollar is already failing. It's not looking great. Banks are complete baloney. What is their other option? They're going to introduce a CBDC and again, the dollar's already being dethroned and there's countries looking for so many other options. So you're kind of just putting yourself in the corner in that respect. And I think it's going to be very detrimental to the citizens of the U.S. Titan of Crypto also pointing out that Bitcoin on the verge of something very big here. According to the SMI MFI indicator, Bitcoin has plenty of room to go bust mode. Or he said beast mode, but it's also beast and bust mode. And you see, again, we've seen this kind of sentiment echoed on the MACD, on the RSI. There's a million indicators showing this, and it's just so obvious. If we fast forward a couple months, and let's say Bitcoin's at 35 or 40K, let's say Ethereum's at 2,500, 3,000, let's say Cardano's at $1, $1.50. If all of that happens in a few months, will you look back and say, how did anyone predict this? Or, man, every indicator was showing we were about to have a multi-month move. I can't believe I didn't anticipate that. Again, it's impossible to predict the future, but all I'm saying is if you look back in a couple of months and we have a nice run in a lot of these coins, will it really be surprising? For me, it won't be surprising. For me, I'll look back on this data and say, oh, that's what the data was telling us for months and months and months. And the data was telling us that 15, 16, 17,000 for Bitcoin was the low of the bear market. And, even though everyone's still bearish, that's another thing I think is interesting is that Bitcoin right now is right around 28,000 and basically no one cares. I mean, I care and a lot of you watching care, but there's not like everybody knocking down our doors asking, how can I get into Bitcoin like they were 2 or 3 years ago. Bitcoin's at 28,000 and pretty much no one cares. So there's not a lot of euphoria right now. Views are still, again, I have a social media metric where I can look at YouTube and Twitter interactions, everything like that. And everyone will tell you the same thing. And you can look at everyone's views compared to 2 or 3 years ago. Everyone's views are still down, engagement's still down. There are not a lot of new people searching. I can tell if new people are watching these videos, and it's basically the same people. So there's not a new influx of a giant, massive amount of new money, a new interest in crypto yet. So that's pretty interesting as well, because last time, a couple years ago, when Bitcoin was breaking above 28,000 for the first time, there was a lot of interest. But again, because we've already reached targets of like 69, 70,000, nice, over the past bull cycle, people look at 28,000, they're like, so what, right? That's still like less than half of what it was. But realistically, if you're looking at this, again, as I've been saying, I mean, look at this chart. If we're truly in a scenario right now, like we were these last 2 times, then Bitcoin is about to have a big run up, and this is like one of the optimal times to be in for the next year or so. This is a very good possible long-term entry point for Bitcoin. And you simply cannot say the opposite. If we had this box highlighted historically, and we compare it, obviously that after having a gigantic bull market, that's usually not the place where people will say, yes, you couldn't have said we're in a bear market because we weren't. If we're breaking new all-time highs, you can't say we're in a bear market. We were not in a bear market back here in 2021. We were right at the all-time highs. So now after the last year and a half of completely getting dumped on, we've been in a bear market, and this is one of those moments where you think to yourself, should I be buying in the bear market to benefit in the bull market? And Plan B, creator of the failed stock to flow model, is it truly failed? His price target absolutely did not get hit of over 100,000. However, if we look at Bitcoin market stages on Plan B's chart here, you can see, this is not the stock to flow model, but you can see that he changed the colors here for blue, meaning the very beginning, early stages of a bull market. Very similar you see in the past as well, when we've seen that back in like 2019 to the beginning of 2020, 2016 to 17, and then also 2012 to 13. And then the green stage being the late bull, the orange being early bear, red being late bear. So you can see, even according to this, we're barely started in the early bull cycle, and the actual late bull where we see all-time highs is not even close. Now, even disregarding this particular chart, I think there's a million other charts that show us that that's exactly right also, even if you don't want to believe Plan B in his chart here. But interestingly as well, Bloomberg Markets, when U.S. banks start reporting first quarter results next week, investors will likely be listening closely to what their executives say about deposit levels and liquidity. I've shown dozens of charts over the past couple of weeks of like how many deposits have left banks. People are just pulling their money left and right because they're losing faith in the banks, which is all they have. But interestingly as well, Ryan Selk is talking about the SEC going to lose its case against Grayscale. And, I also think they'll lose their case. The SEC will lose their case against XRP. And I believe that the current SEC leader, Gary Gensler, is over his head a little bit. And again, it's crazy. He absolutely has no desire to help out people and protect them. They're especially when it comes to the issue of a spot ETF being approved, which they just shoot down left and right. They have absolutely no desire to protect people from crypto, even though that's what they lie and say is their desire. What they really want is to prevent people from making money and prevent people from leaving the banks. They want to prevent the banks from losing money. And by trying to crack down this hard on crypto, that's all it's doing. That is all it's doing. And he has an interesting side note that there's a distinct possibility that Grayscale actually leads some of the biggest booms in crypto, being late 2013, private fund buying built Q4 momentum, and then 2020, the peak of the Grayscale trade, and potentially a spot ETF approval and institutional inflows from Grayscale ushering in the 2024 bust. A spot Bitcoin ETF is something that's been talked about since I got into crypto like 6 or so years ago, and it has been shot down always. Even though it is like a safer, better investment, they do not want to approve something like that, probably just because, again, there's too much money to be made by people they don't want making money. If we look at the bump and run pattern, though, for Bitcoin, are we potentially right here in the bump and run, the bust and run, right here, where we kind of trade sideways a little bit before having a nice bust kind of to the tippy top of this pattern, which would be even touching in the $40,000 range. That's very big to look at. Currently, the stock market's up a little bit today, but again, if we take a look on Bitcoin's monthly chart, I don't know how this doesn't look primed to bust to everyone looking at it. This is a monthly chart, guys. We're not talking about baby charts. If you zoom out, it literally also did predict a bear market. When we had these bearish crosses with the RSI MACD, it predicted it. It gave us the momentum beforehand. This cross happened at the very beginning of January after we had dumped down to the mid $40,000 range. But then that kind of showed us the momentum was so strong to the downside. I remember looking at this and thinking, wow, is it really telling us we're about to enter a bull market? And it turns out, if you fast forward, it's what it was telling us. And now it's telling us the opposite. We're about to enter a period of sustained, prolonged pumpage. That is what this MACD is telling us. That is what this RSI is telling us. This is monumental. In fact, we're much lower on the RSI even than we were back in the 2018 bear market. So again, I think there's a lot of momentum that can be had from these long-term charts of Bitcoin. Again, still firmly within the bone zone here. And Bitcoin itself, look how sideways it's been ever since March 17th. We're coming up on a month where we've just been completely sideways here. Right now, we're holding on the 21-day moving average. Very interesting. Again, don't count out a potential drop down to the 25 or even lower level. But ultimately, I think that the scenario where we have a massive run-up here soon is very likely. Keep in mind, ETH is also within just a very clear ascending triangle, which it began its breakout, but it's kind of just, these breakouts never really just happen immediately, but the setup is there for Bitcoin, Ethereum, even Cardano, a lot of these top holds as well. And, truly, we're just waiting to kind of break this $30,000 zone. 29 has been pretty big, but potential liquidations get massive when we cross the 30,000, or liquidations become massive if we're able to cross 30,000. Easily could push us up to 32, 34,000 because of how quickly momentum, how many sells are at the $30,000 level, how many people are bearish at those levels. Currently, I'm up about 20,000 USD in profit on this market. So if you're interested, sign up with the links below, get massive deposit bonuses, sign up bonuses, no fees for spot trading when you sign up using my link. As well, people ask me, what are the fees to keep this open? It literally shows you on the side here. These numbers here on the side show you the funding fees, exchange fees paid by the time you close your position. So, for being on this trade specifically this is the biggest fee that I have, almost 1,000, but I'm up over 10,000. So that is the biggest fee, and it's not even always a fee. For example, I'm up 6,600 on this position, but I've actually made $300 in funding fees, right? So people were like assuming, you must be, to keep these positions open, you must be paying, thousands in fees. Not really. When you factor in everything combined, it's not even 1,000 in fees, but over 20,000 in gains. So I just thought to clarify that as well. And as well, if you're interested in joining our stake pool, absolutely doing extremely well. We have 2 nodes running this, the Cardano stake pool. We've been running for actually about a year and a half now, I believe. And if you stake with us, you receive ADA, in addition to CCCC tokens, which are just free extra tokens you can do whatever you want with. You just claim them via dripdrops.io, and they're yours. And without any further ado, that's it for me.